Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, if we haven't beaten this dead horse enough, we're going to give you one more reason why the consumer is dead. Let's dive in.
Trade Genius.
So Bob, we had some housing numbers come out yesterday, and my goodness, I mean, we knew housing was probably going to be at risk for a pullback and a reset, but this is starting to get, I think, a little bit ahead of the cart here because of just the levels that we are at compared to like even where we were at when COVID shut everything down.
They say pending home sales was less than COVID. I mean, how is that even possible?
That's amazing.
And it's amazing. And the thing is, people think the reduction in rates are going to help, maybe a little bit at the margin, but usually when these situations happen, more supply come on the market and you actually get a dump in pricing before you get any kind of lift in sales. So it's going to be interesting to watch. But this is why I'm not hopeful. Basically, the home buying conditions is at a record low, meaning your ability to afford to pay it and own a house is the worst pace possible. Now people say, oh, this is blood in the street. This is when you should do it. No, this is telling you that you're unable to do it. Okay. This isn't saying that housing pricing is now in a situation where you need to jump on it. They're saying is you don't make enough money, you're carrying too much debt, home prices are too high, and the cost of owning a home is too high. I don't see any of those changing other maybe than housing prices when we go into a recession. And so at this point, you'd be smart to wait 2 years to buy a house if you can manage it. They said the rent to buy ratio favors renters in nearly every market now, Phil. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. So it just makes no sense to be in that asset class. Now, okay, we talked about that before. What does it mean though? It means there's whole categories of employment and GDP generation that is basically getting wiped off the books. And, the pillars of our economy are, real estate and automotive, and both those are really sucking wind because they're high ticket items that require financing. And people are absolutely stretched to the max. So, Phil, I would say you need to take real estate off your bingo card until at least 2026 to assess the damage. And, look for if you need to generate income, you can come talk to us. We can show you some really good plays there. And if you need to hunker down, then you won't need us. Just hunker down. Go into cash and buy long treasuries and wait it out. In fact, Phil, I think you even raised your forecast thinking TLT from 130, maybe even all the way up to a measured move even higher. What was that number again?
Yeah, up to like 198, almost $200.
That's a double, guys. That's how bad we think it's going to be. We think the Fed will not be able to stop lowering interest rates because they're going to understand the concept of pushing on a string here real soon. And we're going into a political environment where we may have a divided government that are absolutely polar opposite each other, and they won't be willing to help each other for the sake of the economy. So I don't think this is good news at all, Phil. And if you have a home and you're able to offload it, it's one of those things that you may want to think about. That's all I had for today, Phil. Tomorrow we have a really interesting one for you.
Yep. I mean, it's pretty amazing that you're at levels that you saw back between 1980 and 1984 on this. So, and it's weird because prices are stuck at these high levels and the transactions are at like lows and then nobody wants to commit. I guess, the next thing is going to be, that's what makes it scary about the next phase, which is normally what happens is transaction volume dies, then inventory builds. And then your comps start to come down, right? Then you start getting your cuts. So we're just now getting into the cut part of the phase. And it's scary because if the conditions are this bad now, I think the cut part of the phase is going to be fierce and you're going to see quite a bit of drop. So, and that's going to be part of that. It's going to be when inventory hits and, there's a lot of inventory. People say, well, nobody has a reason to sell. Well, they do when they have to cash flow these homes and they're not cash flowing. So that's, I think, primarily where your inventory is going to come. So guys, let us know your thoughts on this. Do you think this is going to be a cataclysmic housing crash and we're going to see something like what we saw back in the '07 collapse? Or do you think that prices are going to be able to maintain more or less these levels? Love to hear your thoughts in the comments below. Otherwise, check out our stuff over at tradegenius.co or tradelikeagenius.com. We've got specials that fit your needs there. We'd love to see you in the room. All right, Bob, thanks a lot. We'll see you guys in the next video. Take care.
Trade Genius.